Good morning, and thanks so much for tuning in. This is Stocks to Watch on BloombergQuint, and I'm Mathew. Two of the three stocks we'll be discussing today are on account of earnings, and the third one, Motherson Sumi, is not the biggest development, but I am keen to hear my guest's view on this counter. Speaking of which, let me introduce him to you. Rusmik Oza of Kotak Securities. Good morning, and thanks so much for joining me today. I want to talk about L&T Infotech first, and we've seen a lot of the IT companies come in with their results. A couple of the big ones have actually beaten estimates and come in with much better than expected results. I think L&T Infotech is more or less in line with what was expected. You have revenue growth of 1.7%, constant currency growth at 2.3%, and that compares with, I think, both TCS and Infosys growing at 4%. But you need to tell me how would you look at these numbers? Even the margins have come in at 19.9%, just about in line with margins. How would you rate the results? And would you say L&T Infotech is a good pick within that sector?
Hi, good morning, Alex. L&T Infotech numbers were stellar because what we monitor is both on sequential and YoY basis. Numbers have been quite encouraging, especially coming from a little mid-cap kind of a company. We're seeing almost around 9.4% revenue growth on a quarter-on-quarter basis, which is very good, and almost a 15-16% growth on a YoY basis. The EBITDA is up almost YoY 43%. And the profit is up almost 26%. So across the board, numbers have been very good for the company. And there's been a very remarkable improvement in the margins. So just to give you a perspective, last year in Q2, the margins were 15.4%, I think so. And they've almost gone to 19.9%. And now this 19.9% is now at par with names like, closer to Wipro and just one notch below HCL Tech.
We seem to have lost Rusmik's line. Rusmik, if you're back with me, you were talking about the margins. You said that it's coming at 20%. It's now at par with?
It's almost at par with names like Wipro. Wipro also does around close to 20% EBITDA margin. HCL Tech is around 21%. So somewhere numbers have been very good for the company. Only small gray area for the company is that the deal wins have been very poor in terms of as what we've seen in the top four companies, and that could pose some kind of a problem in growth going forward in the second half and for the full of fiscal year. So we would like to see from the management in terms of growth going forward and long-term large deals, because in the historical phase, L&T has grown because of the large ticket size deal wins they have been reporting, which is slightly missing as of now. But the management has said that they would see it coming back on track in the next couple of quarters. On valuations, somewhere L&T Infotech trades almost higher or at par with the larger peers, which could cause a little bit of resistance in terms of upside for the stock. So I think the stock probably could either be at the current price or slightly go down because of the poor deal wins they've reported. So we are a little cautious on the stock, although we were very bullish a year back on the company, and it has delivered also. And now there will be headwinds in terms of valuation from here on.
Okay, shifting gear now and talking about a different sector, different company, Hindustan Zinc. From what I can see, the counter has, benefited from higher margins reported during the quarter, but higher tax expenses have impacted those bottom line numbers. At the same time, it's coming at 7% higher at 1,940, just a tad bit lower than expectations. Revenue growth at 25.5% is seemingly strong. Margins coming in at 52.2% higher than expected. How would you rate the numbers and the counter, Rusmik? Would you say that it's a buy in this context?
We are very comfortable and confident about Hindustan Zinc. In fact, it's across the board a very good performance from the company. If you look at the volumes of zinc have gone up 8%, lead is up some 30%, and silver is up some almost 50%. And they have the benefit of realizations also. So just to give you numbers, zinc prices have gone up almost 30% from the March lows. Silver prices were up 43% last quarter when they reported numbers, and that's driven the entire jump in EBITDA also. And good thing is these numbers will sustain and continue, because by end of this fiscal, I think their capacity is also going up from 1 million ton to 1.2 million ton. So for the full year, for this year, we're expecting volume growth of 8%, and next year we will see almost 14% volume growth. So it will be a volume-led growth, and maybe the prices may not sustain and they might cool off, but volumes could set off the fall in realizations going forward. I think on a net basis, we're expecting 10% earnings growth this year and 15% next year. A good thing is the payout ratio has increased. So they paid a dividend of 21.5, which is almost 120% of the net profit. And going forward, I think the dividend yield should be almost around 9 to 10% because henceforth, since the Vedanta delisting is not gone through, the parent will have to rely on the FT dividends that come from Hindustan Zinc. So it's a stock which is trading at just 6.5 times EBITDA with 9 to 10% dividend yield, and upside is pretty good. Our price target on the stock is around 295, wherein we value the zinc business at around 7 times EBITDA and the silver business at around 10 times EBITDA.
Okay, so that's a strong view there on Hindustan Zinc. I want to talk about Motherson Sumi, and I mentioned at the start, Rusmik, that it's not necessarily the biggest development. Let me tell you about it. The company is going to acquire Bombardier's electrical wiring interconnection business in Mexico, and that transaction is valued at around $10 million. Not the biggest transaction there. It includes transfer of assets, employees, and inventories on a debt-free, cash-free basis. Now, seemingly, again, Motherson Sumi looking to ramp up its international acquisitions, international business. We saw a whole shift in strategy in terms of the global entity that is Motherson Sumi. But I do want to understand from the perspective of the auto ank space, would you say that Motherson Sumi is something that you would want to get into ahead of a possible turnaround in the sector, in the OEM sector, in the auto sector?
In case of Motherson Sumi, what has happened is there has been some structural shifts in the entire business model. The company has thrived in the past on acquisitions. Now, since the debt is also gone up substantially, and the phase of high ROE is also past now. For just to give an example, there was a phase between 2012 to 2017-18 when the company used to generate 25-30% ROEs. This year the ROE should be in single digits. I think so. Next year, with improvement in business, which we anticipate very sharp recovery in FY second half of this year and FY22 also. But ROE will still go to around 15-16%, and the stock is trading almost at 16 times on of fabulous recovery expectation in FY22. Coming to this equation, I think so. Wire harnessing has been the domain of Motherson, and they have been setting up global plants in various non-engine related businesses, which is also very good. The only issue with the company is that as compared to the muted ROEs, the valuations look quite reasonable. Our price target on the stock is 115, and we would like to stay with it. But nonetheless, on a sequential basis, expecting very remarkable, very nice improvement in Q2, because the domestic business will report around 13% volume growth, and the international business will also improve. The only tricky thing in companies like Tata Motors and Motherson is that they've got so many global operations. India accounts for hardly 10-15% of the overall revenue. It becomes very tricky to find out, estimate the right set of numbers. But I think there are no major acquisitions going forward. One positive for the company I would mention is that the net debt of the company is around 6,900 crore, and they would be able to generate free cash flow of around 6,500 crore in the next 3 years. So gradually, if there is no major acquisitions, then you will see the net debt going down, and that could probably help sustain valuations.
Okay, thanks so much for that view. Interesting as always, Rusmik, speaking to you in the morning. Have a great day. And to you, dear viewer, thank you so much for tuning in today. I hope that this was helpful to you. Do stay tuned. We've got a lot more to tell you over the course of the day.